All right, guys, let's get into the pre-market forecast here for Monday, December 4th, 2023. Got to prepare for the upcoming trading session. It is 5 a.m. Eastern, so we'll get started in either 3 hours if we're going to be trading one of the Treasury futures or gold or silver, or it'll be 4.5 hours at 9:30 a.m. Eastern if we're going to be trading one of the indices. We don't really know yet until we go through the pre-market forecast and figure out exactly what's going on across the entire trading space. We want to look at all these markets together and see how they look for the upcoming day, right? Is risk on? Is risk off? What news is coming out? You got to take all these things into consideration, try and find the best market possible for the upcoming day, and then trade the trading plan according to that market. So this is where we lay the critical foundation for the upcoming trading day, which is when we actually day trade and implement the process. Hopefully, by the time the session even starts, right, most of your work is already done, which is the prep work, and you're there to simply execute your process. That's really the key to successful trading. So let's go ahead and jump into the pre-market forecast here. We'll start with the E-mini S&P 500. As always, you can see we've got the monthly chart to the far left, the weekly in the middle, and the daily to the far right. And it looks like stocks might be due for a little bit of a correction here this week. I mean, we've gone straight up now for about the last 5 weeks. Doesn't mean we can't go higher. Obviously, we can, but we've got a little bit of a resistance pattern here on the weekly chart of the S&P 500 that could lead to an attempt for congestion entrance to the downside. Down in here around 45.50 is where we could be headed. You've got some temporary monthly resistance here as well into that 4,600 level. So for today, I do see a nice resistance pattern right here on the S&P 500. I like it. You've got a nice extension resistance trend line up there. You kind of just punched up there at the end of the day, around 11 a.m. Eastern on Friday, punched up there and maybe took out some stops, and now it's just kind of headed back down. So I don't think that move up on Friday was the start of the next leg higher on the daily chart. It might be, but we won't know until it has a time to play itself out. But we're interested in one day at a time, and today I do like that resistance pattern for the S&P 500. And what's interesting about this, laying the foundation, you recall if you go back and look at the pre-market forecast from last week on, let's see, what day was that? Was that here? This was, I think this was Tuesday, I believe, Tuesday or Wednesday. I get these mixed up. Let's see, Friday, Thursday, Wednesday. So this was Tuesday. So on Tuesday, that's when I went long the Russell 2000 and had a really good day. And that's because the Russell had a good support pattern on the daily. There was a lot of support there. So that was a great day on Tuesday for the Russell. I think that was like a $2,200 day on the current challenge. And then we had on Wednesday, which you can see here on the E-mini S&P 500. I said coming into that day that I thought there would be strong support down here. And there was, ended up just rocketing up. But that didn't happen until around the close, right? So that day I actually broke even, because even though my forecast was for strong daily support, I took my first shot at the first support level I identified. I could see it was breaking down, took a small loss, and then made a little bit of money back on my next attempt at support. So you can go back and watch that video. But the point is, you don't have to be 100% right on what's going to happen each day. You just got to have an idea. You've got to have a methodology that works, and you got to come into the day with your game plan, right? So it's not like if you think the market's going to go up, right, and you've told yourself, okay, I'm just going to play from the long side today, and let's say the market just goes straight down. You don't necessarily have to lose money or get killed on days like that, as long as you're picking good levels and identifying very quickly when they're breaking down. In other words, when the day is not unfolding exactly like you kind of thought it would, don't force it on those days. Don't push it. And I think that's the biggest problem I see with most traders out here, especially in YouTube land, is that, something's not working. It's like, great, let's do more of that. No, if your trading plan is not working, just shut it down and walk away for the day. That's what I do. I mean, it's okay to have a losing day. Obviously, you're going to have losing days. I mean, trading is not this, glamorous thing that everybody makes it out to be on YouTube, where every day is a winning day and you're making, 20 grand here and 40 grand here. It's not like that, right? It's some days you lose, and you've got to just try and keep those as small as possible. They come, they're part of the territory, and then move on to the next day. So I digress a little bit there, but it's super important to keep these things in mind when you're getting ready for the upcoming trading session. So I say all that because last week, in this super choppy daily range that was, pretty tough for most people to trade, including myself, I still had a pretty good week. And the reason for that is that I prepared every day, and then I came in and executed my plan. And even if the plan ends up being the wrong plan for the day, if you execute it correctly and you keep your losses small, you survive the trade another day. That's the most important thing. All right, so for today, I am going to be looking, depending on how the rest of these markets look, I'll be looking for resistance up here into, that 4,600 level for the S&P 500. And again, just because that's what I'm looking for, it doesn't mean this thing can't rocket to the upside. It can do whatever the hell it wants, right? I'm just saying what my trading plan is and how I'm going to trade it. And most days I manage to do okay, make a little bit of money, regardless of what the market actually ends up doing, because I've got a really good approach and I'm following my process. All right, let's look at the NASDAQ. The NASDAQ here is also looking like it wants to head lower. You can see the weekly trend run here is starting to weaken. You're moving inside the envelope. There's some resistance in here for sure. Daily just kind of pulled back, and you'll recall the NASDAQ never really could get it going last week, like the Dow and the Russell and the S&P to a lesser extent. So I think the NASDAQ's got a lot of resistance up here as well. If I have a choice between trading the NASDAQ and the S&P 500, I'll always take the S&P 500. I like the NASDAQ. It's volatile. It moves. I've traded it in the past. I've traded it successfully. But what I've learned over the years, and especially over the last, let's say, 6 months, is that I like thicker, calmer markets, right? So the S&P is a lot thicker, and it's just a lot calmer than the NASDAQ. The NASDAQ, you sit there and watch that DOM all day, the depth of market, it'll drive you nuts. So the NASDAQ does look like a decent short pattern into resistance up here, but so far I like shorting the S&P better. Go ahead and look at the Dow. The Dow was the big winner last week. Yeah, the Dow definitely is a good short pattern today. I don't know how it'll play out, but you can see here on the daily chart, I mean, that's a 2-bar extension. I thought after this day here, I thought, well, let's see what happens to the Dow. I didn't short it, obviously, but I thought, it could have started to pull back. It didn't. It decided to extend that exhaust for another day. So you've got some pretty good trend line resistance up here into that, high 36.3s level on the Dow. You got a nice little flash pattern here on the weekly. So you've got some resistance up here. Absolutely. But again, these stocks on the Dow and the Russell seem to be benefiting more from this recent round of dovishness from Powell. So I think the S&P, if we're going to go short today, I don't know, I'll have to think about it. But definitely so far, I'm liking potentially shorting the S&P or the Dow, and the NASDAQ does look weak as well. Let's look at the Russell. Have some coffee when we look at the Russell. Remember, I'm doing all this live. I don't edit these videos. I just do them and throw them up. You guys got to deal with all the live stuff like drinking coffee. All right, so looking at the Russell, same thing. Could be some resistance up here. I'm not really interested in trading that. I like the Dow from the short side, or the S&P from the short side a little better. So we'll leave that alone. Let's look at the treasuries. Remember, we got to go through all these markets. So, well, why do we have to go through all these markets? Well, number one, trading is a job. Sorry to inconvenience you. We got to prepare. And number two, we got to find out why all these markets, what all these markets are looking like today, because they're all connected, right? Like, decisions I make on what market I'm going to trade is not only influenced by what I'm seeing on the charts with Owings market analysis, the technical side, but it's also, what are stocks looking like in relation to bonds? What are gold and silver looking like? What's the energy space looking like? What are the food commodities, corn, soybean, wheat? What are they looking like? What does the FX market, the dollar look like? What does the VIX look like? All these things impact our decision making, which is why, I go over all these markets, and I do this for myself, so I share it with you. And I understand that these videos are, not going to be for the, the weak of heart. You're going to have to really be passionate and motivated to succeed at trading if you want to, go through these videos and really try and understand what's going on and put together the game plan. All right, so the 10-year, yeah, you got a nice resistance pattern here on the weekly so far. I would expect a pullback for sure, at least to the middle of the moving average envelope here, mid 109s, and you got a nice little, what could be a daily sort of resistance pocket pattern here. So it does look like, looking at the 10-year, that bonds, could be coming down a little bit today, which means rates could be pushing a little higher again, which means it could weigh on the stock market. So that's reinforcing the bearish look for today. Remember, we take it day by day that we're seeing on the stock market. Go ahead and look at the 30-year. Similar on the 30-year, you're up into some resistance now on the monthly. I'm not going to go into all the longer term analysis right now. We're just interested in today. But the 30-year does look like a resistance pattern as well. The ultra bonds do to some extent as well. Look at gold. I thought that was going to happen. I read that on Zero Hedge this morning. I read gold is hitting record highs. I thought, I'm going to go sit down at the chart and look at it, and it's going to be slammed. Sure enough. Sorry for all you gold bugs. I know there are all these channels out there that like, every day, this is the day, gold and silver, they're going to the moon. Oh man, I love gold and silver. I just think it's funny that these pundits think they're going to the moon every time they go up a few percent. I mean, they move up and down. They're probably manipulated. Everything's manipulated, but not much we can do about it except trade it. All right, so that's a pretty big move out of resistance there on gold. So that's messy. I'm not going to mess with that today, but it's kind of in line with like bonds coming down, rates inching back up, stocks maybe coming down. So right now, I like what I'm seeing for shorting, perhaps ES. All right, let's go to silver. Yeah, big outside bar reversal here on silver. Probably going to see some pressure on gold and silver this week, and stocks too, I think. So, yeah, right now this is just reinforcing shorting stocks. There you can see copper kind of leading the charge. It's a similar trade there on copper. Oh, I know a lot of you guys like Bitcoin too, so I'll start covering that. In fact, we'll throw it in today, hopefully, if I can remember. But you can see copper is a similar pattern here. You see how right there, sorry, sometimes my yellow arrow comes. Sometimes I got to draw it manually with the white lines. Either way, there's that pattern. You see that? It looks a lot like that ES pattern right there. You see how it's firing up like that? Take a look at that. That's ES, S&P 500. Let's look at copper. You see, it's just a little bit more of an extended version, right? So, yeah, copper today looks weak, in line with gold and silver bonds. So, now I do all this again. I'm just repeating this. You say, well, if you think copper looks weak, well, why don't you short copper? It's because I can only focus on day trading one market because I'm not an algorithm. I'm a human being. So I'll choose the most liquid, the market with the most liquidity and decent volatility. That'll usually be one of the indices. Or if I really don't like what I'm seeing on the indices, then that'll be, the ultra bond, sometimes the 30-year. And then if I really don't see something I like on that, then I'll trade maybe gold or silver, maybe crude oil sometimes, corn, wheat, soybeans sometimes if I see a really good pattern. But generally speaking, I'm using all these markets to find out which direction the stock market is going. And if there's a pattern on the stock market, that's the one I'll take. And if that's the case, it'll usually be the ES because of the liquidity and the volatility. It's a nice balance there. All right, so let's go ahead and look at crude oil. Yeah, crude looks like it'll probably be under pressure today. So that's in line with everything being under pressure so far. Nat gas we talked about last week. I think this could be a monthly exhaust for some support down in here somewhere at some point, but I'm waiting. Not going to mess with it right now. Look at corn. Yeah, no pattern there I want to mess with right now. Corn, I'll leave it alone. Let's look at wheat. Same thing, just kind of pushing higher. Soybeans are getting slammed. Looking at the monthly, probably headed back down to these lows or lower. But a lot of support there at 1280 on soybeans. So if we start to trend down and get a nice pullback and a trend run on soybeans, maybe we'll short it this week at some point. Excuse me. But we'll have to see how it develops and what it looks like. All right, let's just quickly look at the euro and the pound. We don't need to look at all the FX. Sometimes I'll look at all the FX only if I haven't found anything else to trade and I really want to trade. And I'll look at FX. If I see something decent, maybe I'll trade FX, or maybe I'll just take that day off because I don't have to trade every day. But I generally don't trade FX because it's just not moving quite the way I like it. But if I see something really good on FX and, you know, that's the only place there's an opportunity for that day, then I'll take it. All right, let's look at the euro. Back in the neck. Gotta go to the chiropractor. Oh yeah, my standing desk. I'm supposed to pick it up on Sunday, but I didn't want to drive in the snow, so I gotta wait a few more days. Is what it is. So the euro, no pattern here. I mean, let that work itself out, but it looks like the dollar could continue to get stronger. Oh yeah, pound, you got a nice resistance pattern there. Beautiful, I like it. Definitely supporting the, so you can see you got the nice resistance there coming out of the flash there. It looks today like, you know, stronger dollar, weaker bonds, higher rates. Now that's going to weigh on gold and silver as we're already seeing, and probably going to weigh on the stock market as well. So I think we're going to look to short the E-mini S&P 500 today. Let's see how we do. I'll start at 9:30 in that case. There's no major news. The only news coming out, I believe there is a home builder forecast at 10 a.m. It's a medium level announcement. Anyways, it's something, but nothing major. So, you know, I'll only start at 8 a.m. if I'm trading the treasury market, gold or silver, crude oil, or there's a big news announcement like, say, non-farm payrolls at 8:30. And of course, I'm going to be here for that. That's on Friday, by the way. But today, with no major news at 8:30, and my pick of the day is to short the S&P 500, I'm just going to wait and trade at 9:30. That gives me a couple extra hours to do some other things. I'm working on a really cool video. I can't wait to share with you guys. It's a pretty cool twist on day trading advice. Yeah, I thought of it. I thought that'd be a cool video, so I'm making that. Stay tuned. And yeah, I'm gonna go to the gym, do some working out, do the ice bath. Technically, it's a shower, but you know, we're not splitting hairs here. And do the sauna. What I like to do, I like to work out first. You know, I don't work out much, but if I do like some just basic chest exercises or triceps or lifting biceps, whatever, and then try and run, you know, maybe a little over 3 miles on the treadmill. And then after that, I go into the sauna and I do some stretching. Just sort of like stretch after that run in the sauna, which I love to. Well, I'll take a really cold shower before I go into the sauna, and then I'll stretch in the sauna, and then I'll go back out and take the longer, really freezing ice shower. And then I sit with my tea and spa area, relax, kind of gather my thoughts, think about this analysis that I've done for the day, you know, kind of basically letting everything sink in terms of what I want to do. So that's kind of how I play it. And then when I come back and I'm ready to trade, I'm very balanced, and you know, the dopamine levels, the body, the mind, the spirit, everything's just relaxed. You know, the blood pressure is good. I've already had my coffee out of the way in the morning, so I'm not all, you know, speedy and jittery. So the schedule that works for me, I encourage you to find your own schedule. It's really important to have routine when trading. All right, guys, that's it. We're going to look to short the S&P 500. I mean, maybe the Dow, but the Dow is also, like I said, you know, it's thinner. There's more volatility, but it certainly has been off to the frickin' races here lately. So, you know, we could see a pretty sizable pullback on the Dow. But then again, the S&P 500 is a little safer. We're still kind of contained here at the extension resistance. We'll make our final decision, but for now I like the S&P 500. We'll see. You know, the ultra bonds are probably going to give us a pretty good pullback today, I would imagine. I mean, the pound looks great for a short, but that's already moving. That looks fantastic, actually. Those of you who want to trade London, go for it. Short the pound against the dollar. But yeah, probably going to be the S&P 500. So we'll go with that for now. And if it's a last minute switch to the Dow, then so be it. But I think the S&P, you know, I'm always going to go for this, you know, quote unquote, safer market. And that's just those more liquid markets, like, you know, if I'm going to trade stocks, most likely I'm going to trade the S&P. If I'm going to trade bonds, most likely I'll trade the Ultra Bond, even though it's not the most liquid of the bonds. It's still plenty liquid, and it adds a little bit more volatility. If I'm looking for energies, I'll trade crude oil. I won't trade like the New York Harbor Blend or RBOB or any of these. You want to find that sweet spot between thick order book and still some volatility, because the thick order book, like the S&P 500, for example, if I'm in on a trade, then you can go back and look at one of the live trading videos. Sometimes I'll get in, and immediately I know that, I don't want to be in this trade. I'm following my trading plan. I'm making decisions to the best of my ability, but I'll get in. I can immediately see I don't want to be in, and I can get out, usually right around break even, right? If you're in a market like the NASDAQ or the Dow, good luck with that, right? It's like you don't have much time to think. And these milliseconds make a difference in terms of your ability to make the right decision. So that's why you should absolutely not scalp. If you haven't figured out that I'm not a huge scalping fan, go watch my video on why scalping is the quickest way to blow up your account. If you want a one-way ticket to the poorhouse, scalp. All right, I'll leave you guys with that. Take care. Have a good day. Bye-bye.